Hey, welcome to the Worry-Free Financial Podcast. My name's Eric Ebers, and I hope that you are doing well. Really, the goal here is that you would be able to have less worry in your finances after listening to a podcast or two, and that I'd be able to bring some information, some clarity, relieve some anxiety for you. What I do is I'm sharing some information about just what's going on currently in the economy, and then I'm also trying to bring some other additional, just general teaching that applies to basically anybody. And so I'm going to just jump in, and the first thing I'm going to talk about is the housing market related to the current situation we're looking at in the economy, really directly related to COVID-19. And right now, we really are looking for mortgages, whether it's a purchase or a refinance. We're looking at all-time low rates. If you believe that you have good job security and a good credit score, now probably is a great time for you to consider doing a refinance. If you're interested, I am a licensed mortgage loan originator. You can reach out to eric@ccm.loans. I'll have that information in the description and the comments of this video if you have further questions. My goal really is to help anybody that I work with. If I don't believe that I'm offering them the best rate that I think they can get, I'm going to let them know that. So I'd rather them have the personal gain than me have the personal gain. I want anybody in any situation to be able to improve their financial situation. The other area really that we're looking at related to housing is the rental market. And this is an area I think that is actually very concerning, is that there's about a third of people that are renters right now did not pay their rent on time this month, or they didn't pay it at all. It's estimated that about 45% of people that do rent don't have enough savings to cover 1 month of rental payment. That 1/3 of people that didn't pay on time or didn't pay at all is up from about 18 or 19% in the previous month. So it's almost doubled the amount of people that aren't able to pay their rent on time or don't pay at all. And so where that's concerning is there's really a domino effect as people that maybe have been affected by COVID-19 that are renters, now they aren't able to pay their rent payment. Okay, now the people that maybe they have their rental property, whether it's a home or apartment or whatever it is, they aren't collecting the rent payment, and they may have also lost income from a job as well, and so they could potentially be seeing the double whammy on that. And so it's not just, I know there's a lot coming out to protect the renter, not allowing the person renting to evict related to COVID-19, but there's not a lot that's protecting the person that's renting. There's something called a forbearance that's coming out where if it's a government-backed loan, they're requiring at least a 3-month forbearance period. But what that really means is that payment is just delayed. You're still going to pay that. You're just going to pay it once that forbearance period's over. And so if you really normally paid $2,000 a month for your mortgage payment, and you're going to go 3 months without a payment and then make another payment, you're going to really pay $8,000. And so it really, I don't think it helps very much. And so that's just something that's going on to be aware of. I don't know that there's really a good answer for anybody in that situation currently. For small business loans, that's part of the stimulus package that was passed. There was $349 billion that was available for small business loans 2 weeks ago. That is already fully depleted. I do know that the government's trying to push for another $250 billion to go into this program to help for people that maybe didn't get their loans approved in time, or maybe they're realizing, oh, I do really need this. I didn't know that I needed it right away, for them to take advantage of that. I do know that there's been some speculation that there's been a lot of businesses that have benefited that maybe didn't really need it. And so that's the unfortunate part of trying to help boost the economy in such a fast manner, is that the government's had to just send out money available for people and not had necessarily the right hoops in place for people to jump through to validate that this is actually somebody that really needs it, even with some of the stimulus checks that are coming out. They're sending, some people are deceased that are receiving payments. So there's just some stuff with that that's just part of the quick, rapid reaction to the current situation, that everything isn't going to run perfectly smooth. There's going to be some people that benefit that maybe aren't the ones that really need it the most. In terms of investing, retirement, one thing I will always say, I probably will never change my viewpoint on this, is that I'm always investing for retirement. I will always invest. I may increase it over years, but I'm always going to invest the same amount every month, and I'm going to do that every single month, so I can take advantage of something called dollar cost averaging, because nobody truly can time the bottom of the market. Right now is a great time to invest. What I'm looking for is companies that I think are expected to perform well in the future, and I think that there is some stuff going on right now that, not that I'm recommending that anybody go out and invest in certain things specifically, but I do think that there's going to be a culture change that's going to lean more on technology in the future, and so there may be, and you're probably, if you were to just look at stock performance over the last several months, you're going to see some of these big tech companies that probably haven't lost anything at all. If you looked at Microsoft or Amazon, they're probably actually ahead of where they would have been in terms of their stock price prior to COVID-19. So this has actually been a benefit for them. Netflix, I know, has as well, and I'm sure all of you have watched a lot more shows than you ever have before. Unemployment, so this is just something that's been concerning every single week, but we had an additional 5.2 million claims for unemployment this week. That brings us to 22 million just in the last month. Most of that probably is related to COVID-19. Currently, you can get up to $600 additional unemployment benefits beyond what your normal state benefits are as part of the CARES Act. And even if you didn't qualify before, there's a chance that you qualify now. So if you're a church employee that doesn't pay into unemployment, you may qualify now. If you're a part-time employee that wouldn't qualify before, maybe you qualify now. If you're an independent contractor or you're self-employed, you may qualify now, and that actually leads me into my next point. Starting tomorrow on April 18th, if you go to esd.wa.gov, for those in the state of Washington that are out of jobs, if you are an independent contractor or self-employed or part-time, you should be able to start applying for unemployment even if you couldn't before. As far as stimulus checks goes, many people have already received them, or they may be coming very soon if you have direct deposit. If you don't, it may still be several weeks before you get that, depending on your income. That's the main updates for in terms of just what the current climate looks like. One thing I wanted to just I'm kind of playing with this. I may want to just go forward with this being my format going forward in the future, but just kind of doing a start, stop, and continue on a certain topic. And one of the things I think anybody should start doing right now is making changes so you don't have to borrow from your future. So what that really means is you want to try to find a way to live within your means. The average American spends $1.26 for every dollar they earned. And it doesn't take a rocket scientist to figure that out, but what that really is the average person is just a hamster running in a wheel that can't get out. You're never going to gain anything if you're spending more than you make. It's simple math, and it's got to change if you want to have any chance of having a successful financial future. 60% of Americans don't have more than $500 in savings. And so really what I would say is you've got to find a way to say yes to what you believe is most important. What are your essentials? You need to be reasonable with some of the things that you deem as maybe non-essential, but I believe everybody needs to do some things to have enjoyment, entertainment in their life, but it doesn't have to be the latest and greatest. I know for me personally, not that I can't afford it, but I just recently upgraded from the iPhone 5 to the iPhone 7, which is still 3 or 4 generations old at this point. It works perfectly fine for everything I would ever need it to do. We pay less than $50 for 2 cell phones on a plan per month. Is less than $50 for us through Consumer Cellular. There's other lower cost plans than Verizon or T-Mobile and some of those others. We pay less than $100 for any of the internet and cable or TV programs that we pay for. I just this week we went ahead and canceled some of our car insurance because we're not driving at all right now, really, with everything going on with the stay-at-home mandate, and so there's no sense in us paying for insurance for our car that sits in our garage if we're not even using it. And so there's a lot of ways that people can choose to save some money if they just say yes. You don't necessarily need the latest and greatest of all these things. They still function fine, and if you were to go back just a couple of years, what is now considered way outdated would have been the latest and greatest, and it probably meets every single one of your needs. So you need to be able to be willing to say no to make room for what your best is. I know for me personally, almost every decision I make, I look at it for what does the long-term situation look like, and I know there's just the impact of compound interest if I were to invest something versus purchasing something today. I know that if I were to spend at age $30,000 on something, but instead chose to invest that $30,000 is probably worth close to $1 million by the time I retire. And so there's just that do I want 30,000 today or do I want $1 million in 30 years? There's just trying to shift that, do a kind of a paradigm shift, and what do you really want? What's most important? And what does that look like in terms of the time value of money? In terms of stopping, you need to stop comparing yourselves to everyone else. You don't have to even leave your couch now today to see the different things that are going on. I know that might just be disruptive to your Netflix that you're watching right now, but even going onto your Facebook, like you can see what everybody else is doing because social media has become such a pivotal part of our lives today, even more so than before the stay-at-home mandate happened. And what you're really seeing is you're seeing the highlight reel of everybody else, and you're comparing it to the behind the scenes of where you're living. And so I don't know if you've ever thought about it, but if you were to go through and just look through all the different Facebook posts on your feed or Instagram or whatever, I would venture to guess that 95% is going to be things that are like, oh, look what I'm doing that's so great. People aren't posting the challenges or the struggles they're going through. And so just keep that in mind, that you're not necessarily, what you see as somebody else's life that looks like, oh my gosh, they've got so much, I want that too, may not be what you really see. And then just an example of thinking of comparing yourselves to everyone else. So if you want to compare yourselves to somebody, maybe you should consider comparing yourselves to Warren Buffett, who is one of the wealthiest people in the world, and he still actually lives in the house that he bought for $31,000 in 1958. That's now, I know it sounds like a lot to a lot of people, but compared to his income, it's nothing. It's only worth about $700,000 today. His net worth is about $71 billion, and so that would be like living in a little Costco shed if you were a normal person. So just kind of keep that in mind, is you need to be learning to be content with what you have, not what someone else has. And I think one of the ways to do that is to continue to try and be thankful for the things that you do have. As you become more grateful for what you have, you're going to be less likely to make impulse decisions. You'll likely be more generous. You're going to be more content with the things you have. And you're going to learn that, that more money does not mean more happiness. And so those are just some things that I've got on my mind right now that I think that a lot of people can benefit from. This is a great book if you're looking for a read on just being content. This is, my goodness, a book by Rachel Cruz, which is Dave Ramsey's daughter, Love Your Life, Not Theirs. It's really about stop trying to keep up with the Joneses, and stop looking on Facebook. Stop trying to have the things that everyone else has. Try to live in the realistic life that you can live in, to live within your means, to have a great financial future. You can still have fun and have that. You don't have to have the latest and greatest of everything to still have the benefits of the enjoyment that some of the technology and entertainment has to offer. And so I just encourage you to be just processing what that looks like for your current situation. That is a great read if you want to pick that up. But thank you for tuning in. I hope that this has been helpful. I hope that you benefit from this. I hope that this has made you worry-free in the area of finances. As always, feel free to send emails to worryfreefinancial@gmail.com if you have questions related to anything financial, coaching related. If you have anything mortgage related, please email me at eric@ccm.loans. I'd be happy to work with you to see if there's a loan product that works great for you and your current situation. Thank you again, and we will see you next week. Bye.